Hi everyone, I hope you're doing well. This is the recorded lecture for our next topic, which is property, plant, and equipment. Remember, we're going through our same stages of the audit, focusing on these middle three, basically doing the work of the audit, and it is PP&E. So if we look at, let me make this a little easier to see. If we look at the learning objectives, there's a whole host of them here. I'm going to tie them into the audit risk model in just a minute, but you should see a lot of similarities with what we've done before in terms of understanding the nature of the transaction cycle, identifying the objectives, thinking about controls, and understanding the client for inherent risk. The difference here relative to the others is an additional 2 learning objectives here at the end, which we'll get to. Well, we'll get to 13-7. 13-8 I'm going to take out. We're not going to do it. But 13-7 we will get to, and that's going to essentially be our application that we'll talk about during our class session. Okay, so first one, describing the nature of it. Obviously, this is a review. This is something you'll know. These are tangible assets. The key is we've got a service life that's greater than a year. Or another way to say that is the benefits of the asset have a life of more than a year. Right, so we'll be able to derive benefits from this asset for multiple periods. And land, buildings, machinery, equipment, improvements, and natural resources are the 3 main groups of PP&E. The journal entries are the ones you've been doing since, intro to financial reporting, financial accounting, as far as the adding new PP&E, doing maintenance and repairs, depreciation, retiring the asset, or making the sale. Those are all entries that you'll have done before, so I'm not going to spend time focusing on those. You can, if you'd like to, you can pause and kind of write those out if you want, but I think we should be pretty well familiar with those at this point. And again, I'm going to use the audit risk model to go through learning objectives. And so looking at the first, or really the second learning objective, is basically how do these assertions map into the audit objectives for this transaction cycle. And so we still, in the italics here, you see these same 6 that we've been talking about this whole time. Well, not the whole time, but for a good bit of the time. And so to apply them to PP&E, we come up with these audit objectives: substantiating the existence of PP&E, establishing the completeness of what's actually being reported, verifying the cutoff of transactions that affect PP&E, determine the client has rights to the assets, establishing the proper valuation or allocation, and ultimately, right, allocation, valuation, we're talking about PP&E. Allocation is depreciation. Valuation is partly, gross PP&E minus accumulated depreciation, but also it includes impairments. And then the accuracy of the actual transactions. These 2 are often paired together. Right? And then lastly, presentation disclosure, which we really won't get to, but it's essentially what you did in your intermediate classes around PP&E disclosure. So our next learning objective that we're going to go through is thinking about inherent risk. And so they kind of put gain and understanding of this transaction cycle and the internal control piece into one learning objective, but essentially gain and understanding of the PP&E transaction cycle is going to help us with our inherent risk, using interviews, documentation, flow charts, all that good stuff. And then, so we got to gain the understanding and then use it towards evaluating inherent risk. And so, some inherent risks, we're going to try to understand the company, to what extent is it capital intensive, where are the significant pieces of equipment or buildings? What are the risks to those? So we're going to kind of spend some time thinking about that. These are highly technical or highly specialized pieces of equipment. What's the likelihood they're going to break down, or what's the likelihood they're not going to be able, they're going to become obsolete? Those are the kind of things we would think about as the auditor. And then thinking about fraud risks are basically going to be looking to see, okay, usually with PP&E, when you're talking about fraud risk, we're talking about misappropriation of assets, theft. And so what kind of controls does management have in place to deal with that? And do we think that are appropriate? Although ultimately, we'll get to control risk in a minute, but we're going to think about kind of specifically fraud risk in this upfront area for inherent risk. But getting into the next set of learning objectives with internal control, understanding those controls, kind of, again, one is kind of as a student, make sure you understand the controls. And then the second learning objective is really about going about obtaining understanding as an auditor. So I just kind of have lumped them together. So some controls that are out there: do they use a capital budget for PP&E acquisitions? How well is the fixed asset subsidiary ledger maintained? You had one of those in the SUA, if you recall. Do they have a system of authorizations over the additions, over the retirements? Those are important areas. Does the fixed asset group look at variances from what was budgeted and try to investigate to make sure they understand why variances occurred? Because these should be fairly, once you set a depreciation schedule, then that should be the same, right? Unless you have an addition or a retirement, that should be pretty set. And once you kind of have planned out how much you want to spend on capital assets, then you want to make sure the firm investigates any departures from that budget, because these are pretty large ticket items. Obviously, there needs to be a statement that helps them decide at what point do we start capitalizing some of the expenditures related to PP&E. Some of these are more maintenance and repair. At what point do we kind of cross the threshold to say, okay, we think this is going to last more than a year, and we can identify it, and it's worthwhile adding to the capital asset account, PP&E account, and depreciating it. And then a requirement that this is kind of also goes into the normal purchasing procedures, because we have a set of controls, or the firm has a set of controls around purchasing that we want to make sure we take advantage of, or the firm takes advantage of. We're just doing PP&E whenever possible. And then just like inventory, actual inventory you're going to buy and sell, doing a periodic I should put in that inventory in quotes, taking an inventory of the PP&E is something that would be a good control that the firm should have in place. And one example, every university I've been at, they will come around and check for example, laptops or desktops that they have issued to me. A lot of times I'll have asset tags on them. They can come in. There'll be a little asset tag on the door. They'll scan that first, like on the door jamb, and then there'll be an asset tag on my desktop, and they'll scan that, and then they'll make sure that the desktop is in the right place, right? That it is where it's supposed to be. Or if I had like a large printer or something that was large enough for them to tag, they'd also scan that, right? So they can periodically go around checking for equipment and things of that nature. And then I mentioned the system of authorization before, but for additions, for retirements, it's important too, because Just because something has, for example, gotten to the end of its estimated useful life, it doesn't mean that it's worthless, right? So we still may be able to get a salvage value out of something. We shouldn't just let employees take those assets, for example. We need to have a proper system, or the firm needs to have a proper system in order to retire assets. All right, our next learning objective is objective 6A. And I think what I'll do is I'll stop here and I'll start up a new video beginning with this one.